Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcasts, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Hey everybody, welcome to the podcast. I'm your host, Mishkin Santa. Today, we're going to be talking about U.S. tax cross-border issues with Cyprus, which is somewhere I've never been before, but I'm dying to go. My guest today, Eleni, has talked me up about it. She's convinced me that I need to get to Cyprus at some point in time to check it out. I have a lot of clients that are in Cyprus. I've worked with Cypriot tax advisors. And so today's podcast is really going to kind of walk through, okay, I'm a U.S. person. I'm interested in going to Cyprus, moving there, going outbound from the U.S. into Cyprus. And I want to understand, what are my options for coming inbound into Cyprus with the residency programs. We're going to start with, the format that we always do, which is what are the general tax rules, just so everyone kind of gets a flavor of what they're looking at for taxes, because everyone wants to understand what the bottom line is there. And then we're going to touch just generally on some sophisticated stuff for trusts and business entities to kind of conclude it and wrap it all up. But before we get into that, let me just pause for a second. Eleni, can you tell our audience a little bit about yourself, your background, your firm, yourself? You got a very interesting background and story. So I'll pause for a sec, let you do some talking.
Well, hi, Mishkin. It's really great to join you today, and thank you for giving me this opportunity. I'm a Cyprus lawyer. I'm based in Cyprus. I'm a partner at Michael Kyprianou Law Firm, which is one of the largest law firms in Cyprus. We are based in Nicosia, Limassol, and Paphos. And I'm a member of the International Bar Association, as well as of the Cyprus Bar Association, of course. I'm a member of the Real Estate Committee of the Cyprus Bar Association because I deal a lot with the real estate law here in Cyprus. And I'm also a member of STEP Cyprus. I have been a member of the board of STEP Cyprus since 2019. STEP Cyprus is very active. I was trying to convince you to join us at the next Cyprus conference. Maybe this is a great way for you to visit Cyprus for the first time and to meet other colleagues in the industry.
Absolutely. So for the people at home that don't understand all the acronyms or maybe missed out on that. So the IBA is the International Bar Association. I met Eleni at a conference, the first time I've ever attended an IBA conference in London earlier this year. And for me, it was kind of like walking into Top Gun. Like you see the best of the best from all around the world. I'm like, I know that person. I've heard of that person. I've seen that person. The top tax practitioner from Switzerland and so forth and so forth. So it was really great. And the conference was fantastic. The content was amazing. From A to Z, that IBA conference really, it's just mind blowing how awesome it is. And then STEP is the Society of Trust and Estate Practitioners, which I'm also a member of here in the US. And certainly another avenue to participate with other practitioners that kind of do what we do. Okay, great. So Eleni, let's get into just some general nuts and bolts. And again, talk to me like I'm a 3-year-old, like I don't know anything about anything. Let's talk about tax residency. So I've gotten into Cyprus. I'm going to stay there. We'll talk about how you get into Cyprus, but I'm in Cyprus. I'm living there. When do I become a tax resident? How do I trigger the tax residency rules in Cyprus? First question.
I think it's very smooth overall for a person to become a tax resident. There are two different rules. The first one is a traditional, I would say, rule of 183 days. So by spending more than 183 days within a calendar year in Cyprus, a person can obtain the tax residency. And there is another rule, an alternative, I would say, route for a person to become a tax resident of Cyprus, And this is an ideal way for a person who is constantly on the go and traveling and not spending more than 183 days in any country. And this is the 60 days rule. So by spending only 60 days in Cyprus, a person can obtain the tax residency if they are not a tax residents in any other country at the same time. And as I said, they do not spend more than 183 days in any other country. And of course, there are two more criteria for this rule: to set up a Cyprus company, either be an employee of a Cyprus company or a self-employed, or just hold the position of a director of a Cyprus company. And of course, have their own residence in Cyprus, which can be either bought or rented. So this is the 60 days rule. And actually, we have seen a lot of people, a lot of business owners who are constantly traveling to finding this option, I would say, ideal for them because it really suits their needs. And as a third step for tax residency, I would add a new one, which is expected to be implemented by the Cyprus government early 2026. The third tax residency test that is being discussed is not yet official, but it's going to be something similar to the French tax residency model in terms of where is the person's business focus so much with physical presence. This is not yet implemented, but it's something that is also expected to be a very good option and fit for people as well.
Awesome. So it sounds like there's one main bright line subjective or objective test. Then there's kind of a sub-test, which some people find advantageous, and then potentially coming up more of a subjective test of center of vital interest that kind of matches what you see in the treaties.
Yes, that's correct. So the traditional tax residency rule of 183 days is very smooth and very easy to obtain. A person can apply for this tax residency as soon as they move to Cyprus, even before completing their 183 days, but providing that they would be showing this intention to be residing in Cyprus for this period. The 60 days rule, on the other hand, they first need to comply and to complete these 60 days in Cyprus, and of course to provide all the supporting documentation. And then, as soon as a person becomes a tax resident of Cyprus and they have a tax residency certificate, they can also apply for the beneficial non-dom status. A non-dom is a great status because it can provide with the person a number of benefits and tax exemptions for 17 years after they obtain the non-dom status. And for the non-dom, they can apply if a person has not been a tax resident in the previous period of 20 years. And of course, they're not domiciled in Cyprus.
Oh, wow. That's a great rule. I like that a lot. I think we might try to steal that here in the U.S. I don't know if you've heard of the potential Trump gold card that they want to implement over here, but I've heard percolations and rumors that we may do our own non-dom regime over here too. That's very interesting. Okay, so what are my tax rates? So if now I'm a resident of Cyprus under one of your tests, what am I looking at for general tax rates?
Yes, so the Cyprus income tax is on a scale depending on how much the person is earning in a year. And the first 19,500 euros are tax-free. There is no tax imposed on this income. And however, a tax reporting must be made even if a person is not subject to income tax. If the income on an annual basis exceeds 19,500 euros and up to 28,000 euros, then the first tax rate to be paid is 20%, going to 25% if the income exceeds 28,000 euros and up to 36,300 euros. And then it's 30% if the income is up to 60,000 euros. The highest tax rate is 35% if the income exceeds 60,000 euros. Here I would like to note about this tax reform that we expect to have in Cyprus. Our president is really working hard to have the tax reform in place on the 1st of January 2026. Why is a tax reform so important for us? Is because we didn't had one since 2002. The Cyprus tax system is generally very stable, and it has been very smooth without many changes all this period. So for over 2 decades, we didn't have a tax reform, and we do expect to have one now to make the tax system a bit more modernized, and I would say to bring more equality between the business community and the society community in Cyprus. As well as to broaden up the incentives and the tax deductions, the tax exemptions, for the local population as well, because we have a number of incentives for newcomers to attract people who now want to become residents in Cyprus. So this would be a good way to bridge the gap, I would say. So with this tax reform that is expected to have, it's expected that also the income tax rates will be amended accordingly. And one of the suggestions is to increase the tax-free amount to 20,500 euros. And the income of the highest tax rate of 35% to be imposed if the income exceeds 80,000 euros instead of 60,000 euros. So I would suggest, Mishkin, if you agree with this, to have another podcast, maybe next year, as soon as we have the tax reform, to discuss what's new.
Absolutely. Absolutely. I didn't know that you guys were going to do, that's music to my ears, that there's going to be some tax reform and tax updates. Yeah, because you guys have been so just, it's been the same every single year for a very long time. That's fantastic. I can't wait to hear what all the final items are. So yeah, let's definitely get you on the calendar for 2026. That'll be awesome.
Great.
Okay, so from what I heard from you, similar to the US, there's a portion that's basically taxed at zero. But the big thing you said there was that you still got to file a tax return. So tell me, in Cyprus, when am I filing my tax return? Or am I filing on a calendar year, a fiscal year? How's that breakdown?
So on the tax calendar year of Cyprus, 31st of July is the deadline to file the tax report for personal income tax. However, the government every year gives an extension to this deadline, and usually could be September or October, depending on the governmental official announcement.
Yeah, I mean, in the United States, there's been a lot of talk about, is April 15th too fast, too early? There have been all sorts of proposals to try to move our deadline back to June, July, similar to what you guys have going on. Unfortunately, the timing of the federal government relies on on all of our revenue being paid by that date. So I don't know if that will ever happen, but I love the fact that you guys kind of push it out and it's kind of later in the year. I think that helps a ton. There's not a big rush. Okay, any special deductions or exemptions? So I understand my tax rates. I understand when I need to file calendar year. Any big deductions? Here in the United States for years, clients love this. They love the Easter egg hunt. Oh, I got this receipt, and I can take this deduction. We no longer really have that. It's kind of minimized to an extent. But in Cyprus, is there anything like that? Anything that people want to do the Easter egg hunt for?
Well, in terms of exemptions, it's very important to note that, for example, dividends are exempted from income tax, as well as interest, unless this interest is associated to the person's ordinary business operation activity. Another exemption that we have is 20% from the rental income. This is also exempted. And then we have a number of important deductions. For example, contributions to charitable associations, which are approved by the Ministry of Finance. The entire amount can be deducted from the taxable income. And it's very important to note that as part of this expected tax reform, for the first time, we expect to have deductions if a person is having a loan for their primary residence, or if they are paying rental for the primary residence, as well as if they have children, depending on the number of children. So this is a very important tax reform that we expect to have. And we expect that this will also give an indirect incentive for families to have more children as well, because of the cost of living, which is very high, especially for families. I think this would be a great boost and great incentives for families in Cyprus.
I couldn't agree more. In the United States, we offer a credit for children, and in our current, we're also kind of in the midst of getting tax legislation, and the most recent proposal was $2,500 per child, and then, but that's in our House, the House of Representatives. In the U.S. Senate, they're talking about $5,000 per child, so a pretty significant amount that could come through, and obviously, I think that would support a lot of families. I think the cost of living plus all the shenanigans with the tariffs in the United States have really taken a toll. And so I think that would help out tremendously. Okay, last question for general tax law. I feel like I'm in Jeopardy right now. So the Jeopardy for 1,000. Does Cyprus have some kind of inheritance tax? So I moved there. I'm a high net worth, wealthy individual, got, 100 million, maybe $1 billion, whatever it is. I pass away. Is Cyprus going to try to tax that with an inheritance tax, or how does that work?
There is no inheritance tax in Cyprus. There is no inheritance tax, there is no wealth tax, nor gift tax. So if a person passes away in Cyprus, for example, and they have movable properties, or if they have movable assets as well, there is no inheritance on this. So there is no inheritance tax. So there is no tax to be paid to transfer these assets to the beneficiaries of the person.
So do a lot of high net worth individuals, or just, I guess, not even high net worth individuals, do a lot of individuals look at that as something very positive, when purchasing, hey, I'm going to purchase real property, I'm going to have my second home in Cyprus. It's not something that, at least from a Cyprus tax law, maybe there are other, in the US, unfortunately, we have the estate tax, but, I think that would be very desirable, where that's just one less thing you have to worry about if you have, real property in Cyprus, or some kind of, high touch asset there.
Well, definitely it's a great incentive, especially if we compare Cyprus with other European Union jurisdictions that they have a very high inheritance tax. This is something that is very important for a person when they're making their planning in terms of their estate planning as well as their tax planning, to consider this factor, whether there is an inheritance tax in place. And especially people who have cross-border assets and business activities and interactions, it's very important to take this into consideration, to have proper planning in place when they would be deciding on where to relocate.
That's fantastic. And I think the other thing which you touched on, you already mentioned it, but I'm not sure I just want to make sure the audience realizes this as well. There are other taxes like wealth taxes and, special assessment taxes. I think I heard of one in Spain. I'm not sure if it ever went through, but they were talking about non-Spanish residents or citizens were being assessed potential 100% tax if they bought property in Spain, kind of a disincentive. And I think it was aimed at a lot of U.S. people, because the U.S. people were going heavy inbound into Spain. And so, those, again, I think when you talk about cross-border, you really have to think about those things, because that could be a real big negative. If you go there and you buy, a €1 million property, a €2 million property, and then all of a sudden, you get hit with a wealth tax or a special assessment tax or something like that. That, to me, that's a huge disincentive for relocating to a certain jurisdiction. So I love that Cyprus doesn't have anything related to that.
You're absolutely right, because taxation could be a great incentive for a person, but also it could be a major disincentive for a person to, in terms of when they're making their decision of where to relocate and where to invest, for example. And the Cyprus Investment Promotion Agency, which is an association that helps to boost promotion and the investment in Cyprus, foreign direct investment in Cyprus, they have conducted a survey which is very interesting, to check all these companies that choose to relocate to Cyprus, and the high net worth individuals who choose to have Cyprus as their place of residence and of business operation. What is the number one criterion in terms of choosing Cyprus? And it was tax.
Okay.
It's not the sun, it's not the weather, it's not the beaches, it's not the lifestyle or the Cypriot food, but it's also, of course, a great
very
incentive.
Good.
But it was tax. Yeah.
Okay, that's very interesting. Yeah, and I think I think the United States could learn a little lesson from that because, when we change our laws constantly and there's constant incentives and disincentives that are happening rapidly all the time. And what I try to tell people is it would be a lot better if they just let it be. I know that sometimes we don't like the policy of what the other party did, but it really takes, so it's hard to plan when it's constantly changing or hard to rely on something. And so I really find, I'll tell you, when people ask me like, Mish, what do you really think? Just beyond just giving me the tax advice, like just as a person, what do you think? And I always tell them, I'm like, if you're looking at this country and they have stability with how they do their tax laws and they're constantly shifting and changing depending on who's in power, I think that gives you something you can hang your hat on. Whether it's good or bad, you can deal with it. You can mitigate around it. You can play with it. So I'm loving the fact that that's what you have in Cyprus. Let's move on to the second topic of the day, which is there used to be, maybe I'm mistaken, but you used to be able to get citizenship by investment in Cyprus. Now I think that is done, but you can get permanent residency and then eventually get citizenship by investment. So I think you get permanent residency by investment and then eventually you can get citizenship if you later want to. But talk to me about, and I get this question all the time, and everyone's always, I'm going to go to Henley and Partners. I'm going to go to one of these big firms that are going to walk me through it. I'm not certain that that's 100% necessary for Cyprus. I think it's actually pretty straightforward, and they can go directly to the source to get their guidance. But talk to me about was there a program for citizenship? Why did it end? What program do we have now? And give me the details, as the kids say. What are the deets? Give me the deets.
Yeah, I will give you the highlights.
Okay.
Let's say. So yes, we did have a Cyprus Citizenship by Investment program, the so-called CIP. Okay. And it was a great program because it gave the opportunity to people, especially business owners, to expand their business presence, explore Cyprus as an island, make their investment in Cyprus, and then become citizens of Cyprus, have their families in Cyprus, schools, and so on, and take advantage of the educational system of Cyprus, the healthcare system, and as well as the business platform. However, this program, it was terminated in November 2020. And since then, the program has not been returned, and we don't expect or foresee this program to return at any point, at any time in the near future, at least. So interested investors who want to make their investment in Cyprus, they can take advantage of the Cyprus Residency by Investment program, which grants the permanent residence permit. This requires a minimum investment of 300,000 euros, and there are 4 different investment options for a person to apply and to obtain the residence permit. The most popular, I would say, option is to invest into residential real estate in Cyprus. In this case, the property has to be new, and there is no limitation in terms of the location. It could be a city apartment, for example. It could be a villa by the sea or in the mountains, as long as it's in the Republic of Cyprus. And it could even be up to 2 residential units, of course, with a minimum price of 300,000 euros. The second option to invest is to invest in a commercial real estate. It could even be resale, for example, in this case, an office or a hotel unit. And the third option is to invest in a Cyprus company, in the share capital of a company which is operating, having business activities and turnover in Cyprus, having, of course, the premises in the country, as well as to have at least 5 employees. And it could even be contribution to the company's existing share capital or to increase the share capital of the company. And the fourth option is to invest in an alternative investment fund, of which their investments are in Cyprus. So there are different options for an intended investor to choose.
And 300,000 for all 4 options. 300,000 euros is the minimum, right? But you can go higher if you want.
Definitely, yes. So this is the minimum, and it could be invested in one of these 4 options. Of course, people can invest higher, and because it might be a bit difficult to find a property nowadays, especially with the prices of real estate going up of 300,000 euros, it could be perhaps an apartment or maybe a small house outside the city, for example. With this price, again, depending on the location, there could be good opportunities as well. But yes, we have seen that this is actually a great program. This program was first introduced in 2013 and has going on since then. We have had only 4 amendments in the program to make it a bit more smooth, more straightforward, and give more investment options to applicants. And with this investment, the entire family can apply. So the main applicant, the spouse, children up to the age of 18, as well as children up to the age of 25, if they are financially dependent on their parents, studying for a bachelor or master's.
Got it. And for the first 2 options, I assume I'm owning that directly in my name. I'm not owning it through a Cyprus entity, or I guess maybe there could be an option where you could buy, and we're going to get into entities and trusts, but certainly you could get an entity and then do option 1 or option 2. But normally it's just direct. I just own the property directly in my name or whatnot, right?
Yeah, they can do it both ways, actually. Yeah, but they can do that either individually, in the main applicant's name or in the spouse's name, or jointly, the main applicant and the spouse, for example, or they can do the investment through a Cyprus company, because there are many benefits in investing in real estate through a Cyprus company, especially tax benefits. So this is also an option, provided, of course, that they are the sole shareholders of the Cyprus company, and all the supporting documentation is provided to the migration department when we submit the residence reconciliation.
Okay, but so if I'm reading between the lines of what you're saying, then I can't open up a U.S. LLC or have a U.S. company and buy the property in Cyprus to qualify, or I can't open up a U.S. trust. It's got to be an entity in Cyprus if I'm going to do it, correct?
Yes, it has to be a European Union entity.
Okay.
And the easiest way would have been just to set up a Cyprus company to do the investment.
Okay. So for the audience at home, for the U.S. people at home that are listening, I want to point out a couple things here. So when you're opening up a foreign corporation and you are the sole shareholder, or maybe you own it directly with your spouse, you're going to get into our controlled foreign corporation rules. And if you want to learn more about those and how draconian they can be in the U.S., go back to the very, very first podcast I ever did, and I walked through the history of the U.S. CFC rules. The long story short here, though, is that you're going to get into a slew of IRS forms, Form 5471, Form 926, Form 8992, which are the bane of my existence. They're the most complicated forms we have. Each carry a $10,000 penalty, civil penalty for failure to file or failure to file incorrectly. There is what's called a check the box regime, where you may be able to opt out of the CFC regime. And if you're a sole owner, then you go to a foreign disregarded entity. And in the case of owning real property in Cyprus, that may actually be your best route. So that's a planning tip. If you own it directly with a spouse, you can't do a foreign disregarded entity. You could do a foreign partnership, so a little bit less draconian than a controlled foreign corporation, but something to think about. For option 3, if you're going to invest in a Cypriot operating company, just be careful. If you're not the majority owner, then you're not a CFC. But if you own 10% or more, then you get into 5471 reporting here and there. So keep that in mind. And then for the very, very last one, the alternative fund, that's when you can get into our US PFIC rules, PFIC, which are also very draconian in nature. But to fix the draconian tax that we have on that, you can do what's called a qualified electing fund. But you got to make that election in the first year you own the fund. That's on Form 8621. If you do that, it's kind of makes the fund a partnership holding, if you will. That's the high level on that one. But just, I would say, if you're thinking about going into any one of those 4 options and you're going to use some kind of trust, some EU trust, or even a trust or business entity from Cyprus, and you're a US person, you should do a pause, as they say, or call a timeout on the field, as we say here in the US, and get some US tax planning advice. All right, we're going to move on. Eleni, tell me a little bit more about the residency programs. So now I've paid my 300,000 minimum. of euro. I'm into one of the four options. Are there any other requirements? How long do I have to keep the residency card? When can I become a citizen? What's the next kind of iterations going on there?
Yes, so this program is related to residency. So this is suitable, I would say, for people who want to have the residency and not to be employed in Cyprus. So there is a distinction here, which means that people who are interested to apply for this residency should have sufficient funds to support themselves, coming from sources outside of Cyprus. And there is a minimum amount of this income that they should present to show that they have this sufficient funds. And the minimum amount is 50,000 euros for the main applicant, increased by 15,000 euros for the spouse, and increased by 10,000 euros for every child. So let's take an example of a family of four, let's say, a husband, the wife, and two children. In this case, it will be 50,000 for the main applicant, 15,000 for the spouse, 65,000 euros, 85,000 euros in total for the family. This amount needs to be presented. The best way to show this is through the tax declaration from their home countries. And this income could be generated from rental income, salaries, pension, for example, dividends, and so on. Now, as soon as a person obtains the tax or the permanent residency, and they move to Cyprus, they're physically in the country for a minimum period of 7 years total, within a 10-year period, they can also apply for the Cyprus citizenship. And of course, they need to show that they have some knowledge of the Greek language as well, of a sufficient level of B1, which is, I would say, easy to complete this criteria. But yet again, maybe because I know the language, maybe I wouldn't say so for a foreigner. But I think that it's easy for a person actually to take the classes and see these exams. And also, a person should be familiarized with the political and social reality of Cyprus. There is another exam to take on this regard. Besides this, the person should show that they have their place of residence and, of course, sufficient funds to support for their families.
That's fantastic. I will tell you though, I probably failed that test. I can't even speak Spanish, which is a failure for all Puerto Ricans look down upon me because I can't even speak Spanish. I don't know. The Greek part might be real tough to come by there. Let me ask you a question though. So if I'm being paid dividends through a USC corporation and I've got the income part covered, so let's just say family of four, I'm getting paid the equivalent of 80,000 euros of dividends from a USC corporation. So it's outside of Cyprus. I have two questions. One, does that work? And number two, are those dividends taxable in Cyprus? Because you said dividends weren't taxable, but I didn't know if it was just Cyprus dividends or worldwide dividends or what the scope of that was.
Yes. So yes, this amount generated from dividends outside of Cyprus can count towards the minimum income amount that a person should show, provided that it's something that is secure and annually generated. So let's say it's not profit from the sale of an asset. This wouldn't count because it has for the annual income. But dividends, yes, of course, this do count. And in terms of the taxes, no, this wouldn't be taxable in Cyprus. So there is no income tax to pay on these dividends.
Okay.
Not in Cyprus, but yes.
Okay, yeah, obviously in the US I'm paying tax on that. So anything else you want to talk about with relationship to the residency by investment programs before we move on to the last topic?
Well, we have seen that this is a great program and has attracted a lot of people. This is especially available to people who are non-EU citizens and who do require a permit to be residing in Cyprus. A person doesn't need to be physically in Cyprus all the time, which is very important for people who want to travel. They want to check on their business in other countries, for example, they just need to visit at least Cyprus once every 2 years. And to maintain the permanent residence, they should maintain their property in Cyprus. Of course, they can flip on properties and buy another one, but then they need to submit the supporting documentation to the migration as well for this newly acquired property. Of course, people should be of clear criminal records, and they should maintain these to continue having the residence permit. And overall, I would say it's a very smooth and straightforward program because people know in advance the criteria and they can know if they can meet this criteria or not.
So I've got two quick follow-up questions that just percolated in my head. So one is, let's say I get the residency by investment program. I'm a permanent resident, but I'm only showing up occasionally. Like you said, you don't have to continuously be in Cyprus. Am I considered then still a tax resident though? Does having that card make me a tax resident and then I've got to file? Or if I'm not a tax resident, do I still need to file? How does that work? And then number two, I assume being a permanent resident of Cyprus, I get access to all of the EU, so I can go around the EU as much as I like. Is that correct?
Well, starting from the second point, Cyprus is not a member of the Schengen zone,
Okay.
which not yet. We expect to become one, and we're at the final stage of becoming one. We
Okay.
expect either at the end of the year or next year, 2026. Which means that the person holding the Cyprus residence permit doesn't have direct traveling rights to other EU countries. Of course, it's easier for a person who has the Cyprus residence permit to apply for the national visa of another EU country and or having a Schengen visa, for example. But it doesn't have direct access. Definitely, this will change once Cyprus enters Schengen zone.
Okay.
In terms of the tax residency, it's not related with the permanent residence. So it can happen that a person has the permanent residency because they have made the investment of 300,000 euros and so on, but because they do not reside in Cyprus for more than 183 days, for example, within 1 year, they do not become a tax resident. So it's not automatic that they want to bring the other.
Okay. Got it.
If
All right.
some person has the Cyprus residence and they acquire the property here in Cyprus and they have another property, let's say, to get rental income, which is, of course, possible to do that, but they're not tax residents of Cyprus, it means that they need to report the income which is generated in Cyprus, for example, the rental income,
Right.
only, and they don't need to report any other worldwide income.
I see. Okay, yeah, very similar rules to what we have in the United States. That's definitely what I would expect. Okay, let's talk about the last one because this is why people come to us, because someone says, I'm a US person and I was advised to set up a trust in Cyprus, or I was advised to set up a business entity to generate dividends because it's not taxable in Cyprus. And then I have to say, well, unfortunately it's taxable in the United States. So we have to walk through that. But tell me about how the trusts and business, just at a high level. I'm not expecting like a full rundown. And I don't think the audience can digest all of that right now anyway. Just give me kind of a high level, why would someone create a trust? Why would someone create a business entity? What are you going to use them for? What's the purpose? What's the benefit? Those kind of things.
Exactly. So let's make things smooth and easy for a person who is not familiar, let's say, like you, with these different types of business entities, and of course with the trust. Starting with the business entities, in Cyprus there are many different types. There is a partnership, the private company, public company, as well as associations, and each is being used to serve a different purpose. From the business entities, we can focus on the private company, which is limited liability by shares. This is the most frequently used vehicle, I would say, in Cyprus, by Cypriots as well as by non-Cypriots, because this company can form different purposes at the same time. It can be used to buy real estate, for example, to have trading activities, providing services, marketing, intellectual property, investment holding, and so on. It's very popular because expenses which are related with the operations of this company can be deducted from the taxable income. And the current corporate tax rate is only 12.5%. With the expected reform that we have mentioned earlier, it is discussed that the corporate tax rate will be increased to 15%, which is still very low. But at the same time, the government is discussing to give some incentives so as to set off this increase in the corporate tax. As we discussed, a person could buy a real estate, and in this case, a rental income will be subject to 12.5%, which is the current corporate tax rate, but also all the expenses which are related to this property and to this income will be deducted from the taxable income, which means that at the end of the day, it's going to be less tax to be paid.
That's fantastic. So a couple of comments there from the U.S. side. So under current law, and I'm going to go ahead and date this. So it's June 5th, 2025, because our law may be changing real quick. But under current law, the tax rate in Cyprus, the corporate tax rate, is lower than 90% of the U.S. corporate tax rate. So the U.S. corporate tax rate is 21%. 90% of that is, I think, 18.8 or 18.9. So if you have a Cyprus company, again, going back to our controlled foreign corporation rules, we're going to impose basically, I call it a global alternative minimum tax, which is GILTI, GILTI. That's going to be imposed on the U.S. shareholder. And you can't use the GILTI high tax exception to get out of it because it's not the corporate tax is not higher than the U.S. tax. So the only other way out is to do either a 962 election if you're an individual shareholder, or if you have a U.S. C Corp, and I'm not even certain a U.S. C Corp can be a shareholder in a Cyprus company. That's a question for you. You may be able to then use certain deductions and exemptions to get to the GILTI rate of 13.125, which I know is, now we're getting into Pillar 2, the minimum corporate tax rate and all that stuff, which the U.S. is we're not going to follow any of that. But I just want to make the listeners aware that those are the issues that are floating around. Now, here's the point I'm trying to get to, a long winding road here. The U.S. corporate tax rate may drop from 21% to 15%. And if the Cyprus corporate tax rate goes up, then we may be able to use the GILTI high tax exception to get out of paying the GILTI tax in the U.S. altogether. And that would make having a CFC in Cyprus actually not that bad. So something to consider, and maybe when we do part 2 in 2026, we can talk about that and see where the chips fell and everything landed there on both sides of the pond. All right, Eleni, moving on. What's next?
So moving on to trust.
Okay.
Cyprus is a common law country, so we're well familiarized with trust. We have the Cyprus International Trust Law implemented back in 1992, actually, and since then has been modernized, even though a reform might be needed in that area as well, and we do hope to have one soon. STEP Cyprus is actually working very hard on this regard to pass certain tax forms that are very much needed on this field. But the trust is broadly used for a variety of reasons. For example, for charitable purposes, for succession planning, for estate planning, even for tax planning. What is so great about this is that through the trust, family can even achieve wealth preservation. Even for business, actually, it can work. So even a person who is not a secured resident of Cyprus, they can still borrow and trust and enjoy the benefits of the trust.
That's awesome. So in the United States, just so everyone's aware, we do have rules about owning foreign trusts or having powers to direct, foreign trust distributions, being beneficiary of a foreign trust. I always call it the 2 flavors of ice cream. You either have a foreign grantor trust or a foreign non-grantor trust. And now we're meandering into very, very, again, punitive forms called the forms 3520, 3520A. I would just frame it as, if you're a U.S. person and you want to own a Cyprus trust, just make sure that you understand what you're getting into. There are definitely ways to make it tax efficient. We got a lot more moving parts in the United States to help out than we ever have before. But just kind of get the advice before you set everything up. And you really have to make sure, if you're a U.S. tax practitioner, that you're reading all of the documents and you're understanding all of the powers that are being enumerated, who can take what, who's included, who's excluded. Very, very important, because I think a lot of U.S. tax practitioners that don't understand all the rules, they only look at this one section, which is 679. They don't look backward to the other parts that come before that, which is 671 through 678. And I think that's where people get in trouble, because there's a couple different ways to make a grantor, non-grantor trust. So just a couple comments there on that. Anything else you want to add about trusts or business entities in Cyprus before we close out here?
Well, as you said, it's very important to have a proper planning before a person proceeds to make either a company, for example, or a trust. It's very important to have to receive expertise advice on this, and to actually decide on what is the main purpose. For example, the purpose is to have succession planning for the family, or estate planning, or even for charitable purposes or business purposes. It's very important to have the bigger picture in mind, and then there are many options, I would say, for a person to use.
Awesome. Okay. All right. So the last question, I always end the show, anytime I have a guest, I always end the show with this question, which is, someone wants to get in touch with you. They want legal advice. They want tax advice. They maybe want, I actually asked Eleni the other day for a referral for someone in another country. And keep in mind, Eleni knows a lot of people. She's on a STEP, IBA, there's these large networks. But someone wants to get in touch with you and they want to have a consultation with you, or they want to work with your firm. What's the best way to get in contact with you? And keep in mind, we are going to link all your information in the show notes. We're going to make sure it's all there so folks can find it. But what does it generally look like to get in contact with you and all that good stuff?
Thank you, Mishkin. I would say email would be the best way for to communicate. And then, of course, I'm also available on WhatsApp and Viber. Zoom and Teams connect people even in different time zones. So it's great to use this as well.
Absolutely. All right. Well, look, Eleni, it's been fantastic. I music to my ears, a lot of the stuff you're saying. I got a lot of clients that always ask me, I want to relocate to that part of the world. Where should I go? They've always heard of, Portugal and Spain, but I always try to tell them there's a lot of other cool options available. And I think Cyprus is definitely top on my list. So I look forward to following up with you on the second, 2026, we can do a follow-up episode, and I will see you soon.
Thank you so much. Maybe I can convince you to have the next one in Cyprus. That would be great, right?
Yeah. That would be fantastic. Would love to do that.
That would be awesome. But thank you so much for this opportunity. I also learned many things today, and thank you so much for sharing this. And
of course,
looking forward for the tax reform so that we can catch up again.
Yep, absolutely. Thank you.
You've been tuning in to the Essential Tax Podcast with your host, Mishkin Santa. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.